Good morning, good afternoon, good night, wherever you're tuned in from. I don't know why I do that in the mornings. I guess I wake up too early and my brain is not firing. But we got the CPI data came in today, came in at 5%, which is a little bit under what we were looking at for likelihood. The expectation was coming in at 5.1%. We came in at 5%. We got markets starting to make a little bit of movements. It's up and down and shaking about. Are you bullish? Are you bearish on today's price action? Do you feel like this is going to unleash some bullishness in the markets? Do you think, are you prepared also for this afternoon? We got the FOMC meeting minutes from last month. What do you think's going on with price action today? What are you doing? Are you sitting on your hands? Are you buying? Are you selling? We got the dominance coming up here. Look at this. Coming in on the dominance, we can see we're coming right up to this zone. I mean, we're testing this zone. Is this going to break through and break this multi-year range that we've been in? Let me know what you're thinking. Throw a 1 in chat if the audio, visual, everything is all right. I need a haircut, which is why, as you can see right now, I'm feeling crazy. Need a haircut. I'm going to get one when I get back to Atlanta this next week. So I've been wearing a hat every day. That's why I've been wearing a hat. But we got a lot of stuff to talk about today. What's the considerations for how we really engage with the market when it is essentially giving us mixed signals both directions. We have a potential with Bitcoin. We see Ethereum in a rising wedge, but we have huge news on Ethereum, that's been building for the last few years with the update coming out today. We're going to talk a lot about that. Come over here looking at Bitcoin. Why do I say 42K? Well, there's a general chart pattern that is in formation here. We can see it's come out to the daily. We can see this bull. If we look at this as a bull flag, the target from this would be all the way up here in the 42K region. Does that mean we just trade this, go long on a lot of leverage? No, we're going to talk about that. We're going to talk about how we can best prepare, the strategies and the tools that we can use so that we can dominate this market, because that's what this show is all about. This show is not about just doing TA for you. I want you to walk away each stream with the better understanding of a different concept. Sometimes we'll break down the same concept over and over because I want to make sure you understand the different market dynamics, the market cycles, the structures, patterns, on-chain data, technical analysis, individual candles, technical indicators, whether it's our paid indicators or the variety of free indicators that are out. There's so many tools at your disposal. And I know from my own personal experience, when you enter these markets, luckily I entered just trading traditional markets before crypto. So I had a little bit of a head start there. But I remember when I really got into crypto, that's when I really started diving into understanding technical analysis and fundamental analysis, which is actually, I find, more important than technical analysis. Fundamental analysis allows you to see things ahead of the action. Technical analysis allows you to pull the trigger on where those specific moves are going to be. We like to break all that down here. So my name, if this is your first time, my name's Kellam. Welcome to the BitLab Academy stream. You can find me there at Kellam, Kelloy, Kellam. And you can follow all of these socials down here. If you have not yet, check these different socials out and head over to the BitLab Academy website. I'm in the talks right now with our entire BitLab crew. I know it's been a long time coming, but it is a monumental undertaking. We've got the new website is getting basically, we're at the point where we're about to cut that ribbon and let you all in. We've got so many new courses from on-chain data analysis, trading fundamentals, psychology of trading, trading strategies, candles, candle patterns, Bitcoin 101, blockchain 101. There's so much coming to the new BitLab with quizzes and tests throughout. So I will say, if you have not yet, what are you doing? Hit that like button, hit that subscribe button, ding that bell. It's right below this video. Do it. Exit out of live chat if you need to, if you're on mobile, and hit that like button, hit that subscribe button, ding that bell. It really helps this channel grow, and it helps YouTube know that it's like voting for content on YouTube. You're letting YouTube's algorithm know that you like crypto content. So let me go ahead and pull up my Discord in case I get any special messages from all of the incredible mods that we have here in our community. So shout out to everybody in chat. I wasn't able to see who the first one in chat was because I was scrambling to get things going this morning. But we got King Peasant, We got learning, great name because that's what we're here for. Sanath Yashwant Savale, I'm not sure if that's correct. We Bomb, Crimson Caravan Company, one of our mods. Alex Green, my main guy. King Peasant, Alexandra G again. My dad, Brad Kellam in the house. Brad Guidell, I'm not sure if I said it. We got a lot of people in here. Karen Swigart Harris, I'm trying to get a special little thing out to you. I'll touch base with you on Twitter. Now let's jump into these charts. I know that's what you're all here for. So hit that like button, hit that subscribe button, ding that bell. Let me look at make sure everything's going good here. We got 107 concurrent viewers right now and only 64 likes. What are you doing? I'm providing you this information for free. We got all these mods in here. We got all this work we do. Just do us that favor and just drop an elbow on that like button, caress it, tickle that like button. Let's get this content going. All right, let's dive into what we want to talk about today. So, of course, we've got the news. Let me go ahead and delete this. Okay, the news. We got the CPI data coming in at 5%. What does this mean? Why does it matter? You know what we should do? Let's go over to Chat GPT. Let's see why CPI matters. Let's go ahead and see how does CPI data affect monetary policy? Now, we're in here for Bitcoin and crypto and, you know, being degens in some ways, but also trying to stay ahead of the curve of, you know, the transition of the world economy. Maybe not entirely do Bitcoin and blockchain and crypto, but it's going to take a huge, in growing over time, a huge portion of liquidity in markets. So we really want to understand this. We really want to understand, as we're having these issues with inflation, these issues with monetary policy, these issues with, you know, the USD losing potential reserve currency. Is it though? We don't know. What we can do in markets is we can look at these charts, and as my dad it's funny, you know, I do this professionally. I was talking with my dad yesterday, and, you know, for people that don't have a deep understanding of TA, it can seem like snake oil, like a snake oil salesman. And in some ways it depends on, I guess, the analyst. Essentially what you want to do when you're looking at any chart, when you're trying to make decisions for your investments, for your capital, you know, if you want it to grow, if you're trying to protect from losing it, there's so many different strategies, and we break down a wide range of different strategies here, from scalping to day trading to long-term position trading to DCAing. But what we're really trying to do when we're doing TA, when we're throwing these lines on charts, it can just seem like a bunch of hogwash. But the truth is, every day there's an opportunity for price to go up and down and sideways. So although this pattern right here, if this was a bull pennant, you know, what we would do is we take this measurement of the flagpole and we would extrapolate this out to the breakout. And that's essentially what's known as a price target from this candle pattern, from this chart formation. Now, does this mean that Bitcoin is going to break out and continue directly up to 42? Absolutely not. What we want to do, what I want all of you to do every time you approach your charts, what I want you to do is really make sure that you're always sharpening your sword, meaning you're always learning. Always learn. I don't care how good you think you get. Tiger Woods at the top of his game had a private, personal coach and trainer. Michael Jordan, Kobe Bryant. They have people that work with them that are separate from themselves, that can give them third-party observation to help them help get better, always going over the fundamentals, always really sharpening that sword. So that's what I want you to do. When we're doing TA, I want you to notice one of the processes that I have, what part of my strategy is to not just come over here onto a chart. Oh, my secondary monitor's sliding down here. I don't just come onto this chart and draw a bunch of lines and go, okay, if it broke this, I'm just going to trade this up. What I do, and you've noticed on when I'm here breaking down all these different price targets and opportunities and probabilities, what I do every day is I go through a number of different things before I even really dive into TA. So I come over here, I come over here into a look node or glass node. or check on chain or look into Bitcoin, all these different on-chain data sites, look into Bitcoin, check on chain, look node, all have a lot of free content. And we can just come through here and you notice I go through and I look through fundamental data, both quantitative and qualitative. I look at, the growth of long-term holders versus short-term holders. I'm stacking basically a deck of probabilities so I can use that in support of or in disagreement of then what I see when we come over here and we're breaking down what's happening on the actual price action charts. Because if there are traders out there, and they're very good traders, from Jesse Olson's one of them, I hope to have him on the show sometime soon, where he's very technically minded trader, but he is so in tune with his technicals and he's actively day trading. So he can be in here on a 2 hour chart and trade this range right here, he's got a combination even within just his technicals that he's not just looking at price action. You can see that this is rounding. So, okay, maybe we're coming up to a previous level of resistance. Okay, so I can stack the price action data that I'm seeing here, this rounding, this loss of momentum coming into previous resistance. So likely I could take a short here. And then so how do I identify where to have a take profit on the short? Well, then you can break down your Fibonacci's, your EMAs. There's a large variety of tools that are at your disposal, every one of you. And we need to stop asking for handouts. The handouts we want is to learn new strategies, to learn new process, to how we can sharpen our sword. And that's what we break down here every day on the BitLab Academy daily stream. So if you have not yet subscribed to this channel, join our community, ding that bell. Now, what we want to do is we're talking about the CPI. So let's go see what ChatGPT said. We're not going to read this whole thing. We'll skim through it. CPI, or the Consumer Price Index, data is a measure of inflation that tracks change in the price of a basket of goods and services over time. So you see, even here with economists trying to figure out what to do about monetary policy, they don't look at one data point. They look at a variety of data points. That is the sauce here. That's the superpower for anybody that it really masters markets. It's their ability to gather data and compound that data, the power of it, through seeing where there's a probabilistic stack up in favor of a certain direction. And then even in so doing, what's your risk management in case it goes against you? Because as my dad will tell you, if he and I sit in a room and the sun is not even out the window that way, but the sun is the opposite direction, it will find a way to reflect off of a car window onto a mirror, off of somebody's windshield, through the neighbor's window, on directly into my eyeball. Okay. And the same thing is true with trading. You may think that you have 14 things stacked in favor of the price is absolutely going to go up. The moment you don't have your risk management in place, the most unforeseen thing that could ever happen happens in the market, and the market goes a completely opposite direction. And then we're stuck with being a victim of ourselves, and we say, oh, if I buy, it drops, or if I sell, then it goes up. It's because we have to plan for that. Crypto Burb, Adrian, who we've had on this show before, he even said his strategy, he plans to lose 7 out of 10 of the trades that he trades. But he trades with very tight stop losses, so he's very well risk managed. And so when his trades do hit, he hits great profits. And so those 1%, 0.5%, 1%, 1.5% losses that he's taken from the stops being hidden are far overweight or completely overpowered by the 14, 50, 100, 300% gains he's getting. So it's okay to take those losses if you have your stops in place. So getting back here to the CPI, we're tangenting today, baby. So looking at a basket of goods and services over time, trying to figure out, is the average price of things for the consumer, for you and I, for retail, is the average price of things going up or down? Now, central banks such as the Federal Reserve in the United States use CPI data to inform their monetary policy decisions. This is key. CPI data can affect monetary policy in the following ways. Interest rates. And this is what everything is really being hinged around right now with markets. We're seeing this even right now with the markets today. We got this is the candle that just opened at 9:30. The CPI data came out at 8:30 a.m. Eastern Standard Time. So why do we have this gap here? What do I mean by a gap? You see this candle close, and then this opened with a gap there. Same thing here with the NASDAQ, opened up with a gap. So there's some bullishness coming from the CPI data coming in under expectation. Well, why is this? Because we're talking about how this is going to affect interest rates and money supply and exchange rates. All these things affect forward-looking investors and how markets operate. I need to stretch my back. I apologize. Forward-looking markets and investors, people that are consistently profitable, they're looking at where they think price is going to go, and not only themselves, where do I expect the majority of the market is likely to push this market? And how can I navigate my portfolio to be in the best position to take advantage of profits, but also manage risk to prevent if things go against my favor? So when we're looking at the CPI data, it comes in under expectation, and this can affect interest rates. Inflation is one of the main factors that central banks consider when setting interest rates. And this is what they're really trying to figure out right now, how they can adjust monetary policy, thread the needle to not absolutely destroy the economy, but the economy does need to come down. Why does the economy need to come down? Because if money is just flowing everywhere, there's no incentive, there's no reason for consumer goods, the costs of goods to go down, because there's abundance of money that's going around. And so you can set higher prices for those goods because more people have money. If you have more access to something, then if you have more access to money and you can drive the prices up on stuff, and you still have wiggle room as a business owner, and your cost of doing business is higher, then the inflation goes up. So this is what the monetary policy that we've really been debating this last year, following out of the March 2020 global economic shutdown. We're still having this lingering inflation. As it looks right now, we're at 5%, and they're trying to figure out what they can do with interest rates, which makes borrowing more expensive. Because if you borrow from a bank, for instance, or you have mortgage rates, those banks, they don't have, fractional reserve holdings anymore. They don't have to hold 10% of the assets on their balance sheet. This is a crazy thing. This is one of the reasons why Bitcoin is so incredible. Banks don't have to, they have a 0% requirement now to hold on their balance sheet. So they basically, if you really look at all the data, basically every bank out there is technically insolvent. And they're trying to come after Bitcoin and USDC and USDT being stable coins. They need to have one-to-one pairing, whereas the traditional banking system is a fraud. Are you out of your mind? This is ridiculous. They're selling you they're selling you snake oil, and they're trying to put all this FUD and, close on-ramps and off-ramps to Bitcoin because it is the better asset. Now, getting back here to CPI, we're going to jump back into the charts here in a second. If you haven't yet, hit that like button, hit that subscribe button, ding that bell, join us here in the community. Let us know. Let me come over here. I got to move this chat. I'm going to move it right next to my eye line so I can see what you guys are saying. I want you guys to be asking some questions today about, whether it's strategy, or you can throw in some coins here that you want to do. I'm going to have some time at the end to go over some coins, and I'm going to make it my mission. Every super chat that comes in, I will absolutely make sure to if it's a specific coin, if it's a specific question or a sticking point, I want to make sure that anybody that's donating money to this channel to help keep us alive, I just want to say I appreciate it very much. Trying to get it to the point where we can turn off the ads for anybody that doesn't have premium. And we will be adding some BitLab members options here in a little bit. I'm trying to come up with some really creative, fun things that we could do to really give back to you all, and also give everybody that's a member an opportunity to have certain questions that they're able to ask without having to do super chats, and they're highlighted, and some special charts and early access to some things. So let's jump back into this. Okay, so inflation, this is what we're trying to get under control. We have the FOMC meeting minutes from last month coming out this afternoon. That's the Federal Open Market Committee or Commission. I can't remember what the C is for, but essentially, you see what we do. We get good CPI data this morning. And now we're going to have the minutes, basically the log of what they were discussing in the last FOMC meeting. Now, if you don't know, the FOMC meetings are where the Fed, the different Fed chairs, and then the different Fed board members, and then the chair of the board, Chair Powell, Jerome Powell, that's where they're discussing, okay, we have all this economic data. We see what's going on in the market. We're looking at unemployment data, jobless claims, non-farm payroll, all this information, and they're determining what they can do to basically bring down inflation. And that's also, of course, has a negative impact, a strong correlation with a negative impact on risk markets, because they need people not to have just an abundance of money so that inflation comes down. So while it does feel like it hurts in some regards, it hurts those that are not able to navigate these markets. But you all are here. You all not only are here, I see a lot of you all over crypto YouTube, crypto Twitter. So shout out to everybody here in chat that really you just are dedicated to learning. And I also want to shout out Crypto JMP. I have a message that I've written up that I noticed this morning. I did not send to you. You were one of the winners from, I think it was last week, from the spin, from the retweets. So I'm going to get that to you today. I just want to shout that out. And we had a lifetime, we did a random lifetime giveaway. We are on Friday, just to remind you all, Friday, we will be doing the spinny wheel giveaway again. So come over here to the BitLab. I don't want to do that. Come over here to the BitLab Academy page. This is what it looks like. Make sure you're on the right one. It's at Academy BitLab. Follow us here and come down to today's tweet and retweet this tweet. We will be doing random each day. So I want you here every day, and you can retweet these each day. And then on Friday, I will spin the wheel, and we're going to add Saturday to the wheel since we're doing Saturday streams now. So retweet those Saturday stream posts that we have here on Twitter, and we spin the wheel. And then we got options from lifetime memberships to the Academy. We got lifetime indicator, multi-month memberships. We've got, I'm going to add merch on there as well. We're going to do a lot of different giveaways, and I want to give back to you all for helping support the channel. So let's go ahead and dive further into this. So what we were talking about, CPI data came in. It was under the expectation. How do we know that? Come over here to forexfactory.com. There's many that you can use. You can use MarketWatch. I like Forex Factory because it gives a lot of different data here. And we could see that we came in under expectation, but then later on this afternoon, we do also have crude oil inventories is coming out. Let's see, this afternoon, where's FOMC meeting? Right here. At 2 p.m. today, we have the meeting minutes. Now, this is going to be important. Why is this going to be important? Well, we have the good economic data coming out from CPI coming in under expectation, meaning there's some disinflation coming on. There's some disinflation going on within the economy right now, which is good for the monetary policy considerations. Because if disinflation is happening, and right now we're at 5%, which is about where I think we're at with the current fund rates. Let's see. Yeah, we're currently. Yeah, so we're basically right about parity with where our federal funds rate is currently, which is great. And if we're seeing disinflation, my nose is itching. I mean, I'm still having allergies. If we're seeing disinflation come in, we're seeing the unemployment data kind of set up towards some of the talking points that they had mentioned in their press conferences, and we have these FOMC meeting minutes coming in later today. We might see some certain criteria that they had talked about or discussed that they wanted to see in consideration for if there's going to be another 25 basis point rate hike, if they're going to potentially pause if certain metrics are hit. And we're seeing some of those metrics. Some metrics have already come out with the unemployment data, the ADP non-farm payroll, the CPI data. And so based on the tone, dovish or hawkish, of what those meeting minutes suggest, this could also drive more volatility this afternoon. It could unleash it further. It could be a nothing burger. So we want to just really, we want to be patient because there's still, when is the next CPI? When's the next FOMC meeting next? I think it's in about 20 days. Let's see, calendar. This is April, so we got FOMC meeting. It's going to be all the way into somebody on here knows when it is. Let me know when it is if you know the day. FOMC meeting, May 3rd. So I'll still be in Atlanta. I'll be in Atlanta until the 5th. So yeah, this is so we got 2 days FOMC meeting, the press conference. So this is, if you remember back to what I was discussing about, I don't know, 2 days ago, I was discussing, looking here at Bitcoin price, this potential that we could be in a window right now that we need to be very careful of. I'm going to pull up just a chart here. We're coming into a window here that we're getting this push up, break out of this bull pennant here. Key resistance in this zone. Why is this key resistance? Look at all this price action here, consolidating. This is a Luna breakdown. And then, basically retracement up, relief, consolidation, then rejection down into just the cascading, how do we not realize we're in a 4-year cycle? Oh yeah, we have a bear market to contend with. That's really what this was. Analysts remembering that we have a 4-year cycle we need to pay attention to. And this is perfectly in line with where we should be in a 4-year cycle. And so the fact that this broke down here and caught so many of us off guard, we need to be better next time. Everybody, you, me, everybody, we need to be better. Eric Brubaker, BitLab Academy, do you have stop losses set on your investment portfolio too, or just your trades? So this is a great question. We're going to jump back into where we're going to go in the next few weeks here on the market. So that's a great question. What I do is I have basically a trading portfolio that and the reason why I say I allow myself to trade with only this much, because one of the number one things you need to do in this market is you need to know thyself. And if you put a $10 bill in my hand, I will find a way to light it on fire just because. And so what I've had to learn to do over the last 20 years, but I can't say I've even learned to even start to do it properly until the last about 7, is I understand what my shortcomings are. I understand where I fall short. I understand what I struggle with. And I'm learning more about that every day. I think that's one of the benefits of getting older is your ego starts to recede and your vision of your true self starts to come more into focus. When you're 22, you know everything. When you're 25, you realize you didn't know everything at 22. At 25, you realize, now I know everything. At 27, you realize, man, I don't know what I was thinking at 25. Now I know. And then you hit 30 and you go, I don't really think I know. And then at 35, you go, there's so much I don't know. And then you get, closer to 40 and, I'm 39, so I'm not quite 40 yet. And I'm realizing that there's a lot of knowledge and wisdom that I've gained over my life, but I'm realizing that it's a penny in a sea of trillions of dollars, right? So my knowledge of what I don't know is far surpassed what I do know. So this is why I'm so apt on everybody learning. And so when I trade, tying this back to when I trade and invest, I have investments in multiple different places. I have some traditional assets that I force myself just as a hedge that I do invest in, and within that traditional portfolio is also a 5% Bitcoin ETF. So I still have exposure to Bitcoin even in my traditional investment portfolio, but I don't allow myself access to it. It's just automatic DCA once a month that goes in at the first of the month. Then my investment portfolio with crypto I have in cold storage that I do not allow myself to access, because in the past, I will tell you, I had a lot more Bitcoin than I have now. And I made stupid decisions. And I was like, I saw a trade setup and I was like, oh, but I don't want to do that. I'm going to pull some of this out of my cold storage and I'm going to put this on, I made stupid decisions in the past and I am so much better for it because I learned from those stupid decisions. So I have cold storage that I do not allow myself to touch. And then I have about, I try to keep under 15%, around 10 to 15% of my portfolio is a trading portfolio, but I do not allow myself to trade with 100% of my trading portfolio. I'll pick, 3 or 4 assets at any given time that I'm actively sort of trading or getting in position to trade on. And then in that trading portfolio, I definitely set stop losses. Where we're at right now, when we look at the chart, Wrong button. Where's my button? When we look at the chart right now, we're in this very choppy zone right here. So, coming into this, I was position trading this, essentially getting in position. I'm going to double click on the chart to minimize the indicators on the bottom. Just for any of you that don't know, you could do that. It's a good way. And if you have multiple charts also, if you're on Mac, it's Option. If you're on PC, it's Alt, but you can just press Option and you can go to your multi-screen thing if you have that set up. Really easy way to navigate your trading view. But I'm position trading. I'm not trading a lot of the push up volatility down. I'm not giving myself a heart attack because I'm spending 12 to 14 hours a day building BitLab Academy content for the BitLab Academy website, which if you haven't yet, come over to BitLab Academy, sign up for this email list. We got some great stuff we're giving away when we launch, and it's going to be pulled from these people that are part of this mailing list. And we send out, basically charts, alpha. It's free, and you get entered to win. And you're going to know as soon as we make it over to the new site, which is it's in. I mean, I cannot tell you how excited I am to launch this. It is coming in a matter of days. So get involved there on the BitLab Academy website. And if you are interested in the indicators, you can find them here, the BitLab trading stack. You can find them bitlabacademy.com/indicators. Now, coming back to this, what I'm doing is I'm position trading. For instance, right here, picture this market, picture that we are essentially about right here. I'm trying to identify an opportunity to get in and capitalize on the majority of this move. Or similarly, we could say we are right here. I'm trying to take advantage of, actually, this is, let me just retract this statement here. This is more likely a scenario where we're at, somewhere right here. And the reason I say that, if we pull up our halving, past halving dates, we can see this is a halving, this is a halving, and this is a projected next halving right here. So if we're looking, let me turn off these other indicators. If we're looking at the price action right here, and this is a halving, then this is not likely at all where we're at. We can look at just at the 4-year cycle map. This is likely where we're at, somewhere in this region here, or somewhere in this region here. So what I'm looking to do is trade basically a midterm position trade. This is on the 3-day chart. So let's say we're right here on this consolidation, then this would be about 2 months. We could, if we're looking at 2019 price action, then we're looking at about a 2-month push up. If it were to mimic this exactly, it's not going to mimic this exactly. So this would be about a 2-month push up. And I'm not trying, I've already gotten myself in position at these lows, and on dips, I've added to my position. I have a line in the sand for Bitcoin, which is right about $22,000. And so if price action gets down to that level, I'm on the charts all day long every day. So if the price action gets down to that level, I have alerts set, and I'm going to be looking at a lot of momentum indicators, velocity indicators, divergence indicators, all of which, by the way, mind you, are in the BitLab trading stack, which is all of these indicators here. The BitLab Market Intelligence, which has 10 different indicators within it, reads all these different divergences, as well as the EMA ribbon, as well as showing the high and low pivots, and then the hidden volume, and then the relative extrema, and then the significant movement. All of these aggregate multiple other indicators. So we're really looking at about like 30 different indicators with the BitLab trading stack consolidated into these. And we are in process right now of also, with the BitLab Academy updates, we have updates coming to these indicators. Some of the BitLab relative extrema is going to be integrated into the price action on the candle bars, so you can see first look when things are unhealthy movement, when you see momentum shifting. There's going to be a lot of great stuff. Maybe some buy sell signals. I don't know. We'll see. But when this price action, if it does break this level and come and test $22,000, $22,500 really, then I am going to be looking at potentially all due to the momentum potentially exiting. Why am I saying 22.5? Well, we've talked about this a lot on this show, but we come over here to looknode.com, come to market valuation, come to cycle valuation, Bitcoin trend fib, and if we look at this this chart, let me zoom out a little bit and go all the way over. We could see that the trend signal line, the short-term holder realized price, which is right here. We can see this red line. It's this line right here, this dot. This is the short-term holder realized price, which is also marked key trends in the market. I've pointed this out before. I'll point it out again because I want you all to get this, really pay attention to this. And you can turn off all these other bands just by clicking on these, extreme height. And we could see this line right here. We can even turn off these others. We could see when we break through this, this is shown to be excellent determination. Like we get a fake out, then a wash out to the downside. And then once we broke above this, this has been support the entire bull trend. Once we broke below it, rejection, bear trend. We even got rejected right here. Once it came all the way into it, rejected. Once we broke above, this is similar. We're either somewhere right here or somewhere in this region here compared to the 2015 cycle. So once we get above this, it is very bullish. And we see this right here, this current price action. We have broken above this. We have retested it. So if we come back down to this level, I would be very wary of if we did break below this level. I don't plan on exiting positions. It would have to be some catastrophic news and high velocity likelihood that we'd be breaking down to continue lower. But I do think the bottom is in. And so coming back down to this level and below this, I find as dream opportunities as to where price action is. Because when we look at the Bitcoin price cycle, if we turn off, let's hide all the drawings and mute the indicators. I'm going to even delete this. We could see based on where we're at, this is a halving. We're somewhere in this region here, somewhere in this region here, and this is what we're doing right now. And it's at all odds. It is at all odds with the global picture of what's going on in markets. I know it is. But we're seeing at the same time this negative global landscape for financial assets and the financial ecosystem. At the same time we're seeing that, we're also seeing the narrative shift. It's starting to shift within the news media about Bitcoin being a safe haven. We're seeing long-term holders hold longer than they've ever held before, or the number of long-term holders and people holding through adversity in the market. Let's come over here to favorites. We can go, actually, I'm going to come over to, let's go to Glassnode. Go to Glassnode. I'm going to turn this off so you can't see some critical information. How's everybody feeling today, man? Have you hit that like button? If we get over 300 likes, yesterday we hit 300. If we hit 325 likes today, I will give another lifetime membership to the indicators. So get the likes up, hit that subscribe button, ding that bell. I just want to give back to you guys. We have so many updates coming. I want you all to be able to participate in these incredible things that we're bringing. You know, there's like, I think over 100 new lessons that are coming to BitLab Academy, the updates to the indicators, and we got this show every day breaking things down. But what we're looking at right here is we want to look at supply last active 1 to 2 years. Coming here back to Glassnode, we got 340 concurrent viewers, 190 likes. Let's get those up. What we could see is that essentially look at this sharp increase right here. This is the number of supply last active 1 to 2 years. Sharp increase. Look at this. And we see this is marked the bottom. This is marked the bottom accumulation zone. This was early on in Bitcoin's cycle, so there wasn't a lot of Bitcoin held for 1 to 2 years. But we're seeing this, and we've marked this. This actually already marked it here, and then we got the FTX collapse here, and we're seeing this number drop and drop and drop and drop, which means that there's a lot of bullishness coming in, the maturity coming into the markets. Let's come over here. I was not able to go through some of these important considerations here for I want to come to, was it Will Clemente? If you're not following Will Clemente, make sure you come over and follow Will Clemente. We can see right here, he's got a chart. Where is it? I don't know where it is. It's okay. What we could look at also, a good relationship from the long-term holders is also looking at the RHODL, which is some people call it RHODL, the RODL, whatever you want to call it. This is an excellent measurement. And within all the new BitLab courses, one of them, we have a full on-chain course that I think has 20 different lessons in it. And we break down a lot of these different charts. And we show, I mean, this line right here is a ratio. It is a ratio between long-term holders of 1 to 2 years. And we can actually scroll down here. You can see this is a ratio of coins that are held from 1 to 2 years and coins that have moved within the last week. When you have a lot of coins moving within the last week, meaning coins are transferring from long-term holders' hands to short-term holders' hands, then this ratio goes up because this provides market weakness. The more coins that are moved from long-term holders into weak short-term holder hands, the weaker price levels get. So this is why when this dips into the red, we're seeing these market push-offs. Now, we did not quite get there on this market cycle, and there's a lot that goes into this. We had the Bitcoin mining ban in China, which drove down hash rate. And as Willy Woo has said, Willy Woo, another person you should follow here on Twitter, it's Willy, it's Woonomic, Woonomic. He says that Bitcoin follows hash rate. Bitcoin price follows hash rate, and hash rate is basically all the miners on the network. When you have a lot of miners competing for contracts, not contracts, when you have a lot of miners competing to solve the cryptographic problem, that is the proof of work, which is the underpinning of what Bitcoin is. When they're competing to mine, the hash power goes up dramatically, which means the network is more secure because the network is the most decentralized when you have the most hash power. And we can see we're so early in the adoption rate as opposed to where we're at with internet users. And you have to remember, internet adoption rose out of pre-internet conditions into internet conditions. Bitcoin is in a situation where it's going to be able to grow faster, I think, than internet did once it really starts going, because now we have network effects of the internet. And so when we're considering this and we're considering hash power, and we're looking at where he's got a great tweet here regarding hash power. Let's see. We can actually just look here. Let's come over here. Hash. We got hash ribbons and hash power. We could come here, look at hash ribbons. We could see that the moving averages of the hash power is just going up over time. A little bit of a pullback here as the market pulled back, and then right here where the miners shut off, we got an inversion. And this is one of the charts that we actually cover in the on-chain course. This is the 30-day and the 60-day moving average of the Bitcoin mining power. And when the 30-day is above it, we're bullish. When this basically collapses below it, this is actually marking this is capitulation signal of miners and signals likely trend cycle bottoms. And we see this over and over again. And we kind of got it here. For some reason, it's not flashing on this chart. So there should be a green ribbon here, but we could also see this on Glassnode. There's a better power. Here we are, hash rate. We can see right here, 7-day, 14-day. Look at this hash rate going up over time. This is the power of the decentralization and the security of our network. And if Bitcoin is nothing else, if we want to argue that it's not valuable because you can't touch it, I would argue that 95% of people that own gold own a form of gold that they bought through some trading platform, whether it be Robinhood, E-Trade, eToro, Fidelity. And 95% of those people that own gold have never touched the gold they own. So that's the stupidest argument I've ever heard. One. Two, if we think about the power of Facebook, Instagram, Twitter, YouTube, the value is in their network, right? The number of people that it touches and how strong their network is. And when we look at the hash rate, the strength of the network, we're seeing we can look at this in two ways. We can see the strength of the Bitcoin network right now. We're seeing it grow up exponentially. Look at this through this. Basically, let's go from here, April, May of 2021, or November of 2021 as well. And then this strong downtrend, and we're seeing the hash rate just to average just up and to the right. We're seeing economic power and network effects taking place. Now, if we look at adoption, actually not adoption, addresses, we can see new addresses. We see new addresses going up over time on average, and we see a huge spike. This is a hype cycle. This is when, you know, prices above previous all-time high, and we get news media out that, you know, out everywhere, and it's just, you know, the person walking down the street, your Uber driver, your Uncle Larry, your Aunt Linda, everybody that always was hating on crypto. This is when they're buying these hype cycles. But if we just smooth this out, we go on 90 day, we could see that on average, this is just moving up over time. Even right here, when price action was coming down, new addresses, we see active addresses generally trending up. We're going to have these blow off tops in these cycle peaks, of course, but we're seeing the general average going up and to the right. Let's go to total addresses. Total addresses. Look at this. This is the network effects of Bitcoin. So let's look at some of these charts. Let's talk about it. Let's talk about what's going on here. And then my dad in chat says gold has been stolen throughout history. Yes, absolutely. So was it 1923 gold confiscation? Is this what it is? Executive order 19. Okay, here we go. 1933. So Franklin Delano Roosevelt, 1933, gold confiscation was a bailout of the Federal Reserve Bank. Now, this is what everybody should be worried about. Everybody, you need to hit that like button, hit that subscribe button, ding that bell, because this right now is literal gold, what I'm giving you. This is what you need to be paying attention to. And this is why the economic situation globally for what's happening with traditional finance, traditional banking, central banks. This is why they're so scared of Bitcoin. Gold confiscation. A lot of people were holding gold. They were holding it because it was, a store of value that was recognized, and it has been throughout history. But in 1933, there was an executive order that basically, look at this, outlawing the private ownership of gold in the United States. You see that? And this is what bailed out the Federal Reserve Bank. Who's in charge of things right now in terms of monetary policy? The Federal Reserve. But what can they not confiscate? They cannot confiscate gold any longer because the gold has been off the gold standard, I think, since 1971. Gold standard, when was it? When did we go off? Yeah, so 1971, we went off the gold standard. So now we don't have any tangible asset for the Federal Reserve to bail themselves out. So all they can do is print more money. That's all they can do. And we want to be mad at it. Think about this. We want to be mad about inflation and these monetary policy instruments that they're using. But, you know, the U.S. government has painted themselves into a corner. One, and I will say this, and I apologize to every single one of you. One, because us as a citizenry have become dumb as hell. We cannot allow ourselves to be so dumb. We are wanting and asking for things and requiring things that then when those things happen, it's so short-sighted. It's so short-sighted. So we're holding, politicians need to do things. This isn't just the U.S. This is the world over. Politicians, especially in the U.S., need to do things to make sure that they can continue to get their electoral vote. And so what the electoral vote, what the people want, is so short-sighted because we forgot to look into the distance and make smart decisions about what can impact us into the future. Now, all of you that are here at BitLab Academy watching this stream, or if you're also an alumni in the BitLab Academy courses, and I can't wait to share all that stuff, all the new stuff, then you are on the right side of all this. You are looking at Bitcoin and crypto as an opportunity, as a displacement, as an alternative to this traditional system that is in process of ruining hundreds of millions of people's lives. I'm talking about the traditional system. Bitcoin is a threat to that, and therefore, this is why we're getting on and off ramps closed. This is why Signature Bank, of course, they were doing some things that were a little off color or off the book, but look at every bank. I mean, look at every bank out there. JP Morgan fees since 2000 or fine. Let me do fines. This is gonna blow you away. I think it's like 32. Let's see. Let's pull this up. I didn't have my screen up. I had it up the other day. JP Morgan money laundering. Is it money laundering? Yeah, money laundering. This is. This September of 2020, agrees to pay $920 million in connection with schemes to defraud precious metals. Okay, so if precious metals and gold and nickel and all this is supposed to be this is what the traditional finance people say, Bitcoin isn't valuable because it's not backed by these things. And then you look at one of the largest banks in the world, and they're paying fines because they're using schemes to defraud precious metals in U.S. Treasury markets. Okay, what the heck are we supposed to be doing here? This is what I wanted to show right here. Violation tracker of current parent company summary for JP Morgan Chase. Penalty total since 2000, $36,129,286,132. You see this? And they're trying to say Bitcoin is a bad thing. And when we're looking at all this, excuse me, I have to close. I'm feeling the spirit today, everybody. I'm just getting heated up today. I mean, hit that like button, subscribe. We're going to be jumping into the charts here in a moment. Start throwing in the coins you want me to break down here in a little bit. We're going to do some TA, see some targets, see what's possible. We got to talk about ETH as well, but I just want to get this last thing off my chest here. The Federal Reserve has nothing now to confiscate to offset all the bad decisions that have been made collectively since 1933 and arguably even before that. So only thing that they can do, and Dylan LeClaire actually points this out on his Twitter regularly as well, the only thing that they can do is debase the currency further, which is part of the reason why the US dollar reserve is coming under fire globally and them looking at other alternatives, because what we do with the dollar affects their economy. So if things are bad here, they're going to be way worse other places. And so there's nothing that they can do but print more. So really, as bad as all this is, the silver lining is for all of you that are here right now is that you are ahead of the curve. You are so early in adoption, and Bitcoin, and it's not going to be every crypto out there, but Bitcoin will be around. Ethereum, I have a very strong feeling will be around. Cardano, very strong feeling will be around. These coins, when we're looking at CoinGecko, let's go to CoinGecko, pull it up on the screen. These coins, and we have to be wary. We still have to diversify, because Luna, which was in the top 10, Luna was in the top 10 and it fell out. It completely collapsed. So you do need to diversify. But Bitcoin, Ethereum, Binance Coin, I could very well see being around. It's one of the coin from the largest exchange in the world. XRP, I think, is going to have an amazing explosion after their case settles. Even if the case settles less in favorable conditions, the community is so strong, and they're so integrated with a lot of the banking system, banking processes that they're integrating into. That although some people are absolutely against XRP, in terms of having a hedge against the traditional assets and then crypto assets, XRP kind of has a foot in both worlds there. Cardano, I think, absolutely is going to be around. Dogecoin, I think, is still going to be taking advantage of people, and people don't realize how much inflation is in Dogecoin. Bitcoin will only ever have 21 million total ever Bitcoin. There was never going to be more. Dogecoin does about, if you saw on the Saturday video I did this last week with Jordan Lindsay, Bitcoin does prints about 21 million new Dogecoin about every 30 to 35 days. So do you want to hold on to an asset like that in terms of speculative value going up over time when it has such high inflation? No, this is kind of antithetical to this idea of getting out of systems that are highly inflationary. Now, will this probably perform well? Yes, it probably will have some very large pumps and some probably will grow over time, but it's not going to really compete in a long-term portfolio for the exponential gains a lot of other coins will get on a sustained level. Will this have massive pumps? Absolutely it will, but it's narrative driven. Will it get integrated into Twitter? Likely it will, but it's not going to be the only one. It will likely get integrated into Twitter for different payments and tipping options and stuff like that, along with you know, potentially Bitcoin, maybe ETH, but ETH is very expensive to send, so maybe not ETH. Bitcoin, ETH, Cardano, very likely, very cheap to spend. AVAX, Polygon for sure. There's going to be a basket of currency, so we need to keep all these things into consideration. Now, getting back on topic here, I think we want to look at some of the things going on with the charts. And before we do that, we have got 253 likes. Let's get it up. 325 is what I said, I believe. Get up there. We'll do some lifetime giveaways. Now, ETH is in a precarious situation right now because they have this. I have a where is it at? Boom, boom, boom. Here we go. So ETH has this upgrade coming out today, the update today, April 12th. And everybody's wondering, this is why there's been a little bit of a suppression on Bitcoin's, Ethereum's price. If we come here, let's turn back on all the stuff. We are seeing this is coiling up into, you know, a bit of a rising wedge, which tends to have a breakout to the downside. But in a situation like today, you want to utilize, remember when I was talking early on in the stream, we want to use a basket. How the heck is Chemistry Bro? How is he not a mod? I got to make him a mod right now. Standard moderator. So we have to use the basket of knowledge we have from technical analysis, fundamental analysis, what's going on, in this case, fundamental analysis. We have a massive upgrade coming to Ethereum with the Shanghai upgrade. And with this upgrade, there are, 36 billion, I think is the number. There is 33.6 billion worth has been staked and locked. This is the key, locked into the beacon chain across 564,000 validators. Now, this is important because the consideration here is as the markets are moving, Bitcoin is moving, and we see the dominance is testing this upper bound of this range we've been in. And we come over here, we come over to the total market clap. Let's get that market clap, everybody. Total market cap we see is kind of it's kind of fighting this region, and a big part of that is Ethereum is such a big part of the altcoin market. This is the altcoin market cap. It's all total market cap excluding only Bitcoin. So this is Ethereum and every other crypto, and this is finding resistance, and this is held back a little bit because when you have the second largest crypto in the ecosystem having a major upgrade. And there's going to be $33.6 billion worth of Ethereum that's going to be unstaked. The speculation is a lot of this staked Ethereum going to be dumped on the market? Well, I've got some good news for you. In reality, the way this upgrade is going to be playing out is that I think it's around, essentially when people want to unstake, there's a waiting list, basically a queue order that they get put in. And if, you know, it's basically, it would take over 500 days, I think, 400 to 500 days for all of the stuff to be unstaked based on the way the queue system works. So they have a regulation, a regulatory sort of filter, a process in place to prevent it just all from just being immediately dumped. So will there be some price action sell off on this? Will there be some ETH sold when stuff is unstaked? I think likely, but when you consider in order to stake, you had to have 32 Ethereum to stake. The majority of people that had 32 Ethereum a year ago, you know, or longer, or any way along that process, people that have 32 Ethereum tend to have some sort of monetary sense about what's going on in markets. And they're forward looking in markets. Okay. So I don't think, even if they were able to pull it all out, I would argue, based on where we're at in the market cycles, they would not just go and dump all of their Ethereum and take, you know, sell it all. It's a silly consideration, but market makers play on that consideration. Market makers, big money, coordinated efforts, look at this and go, okay, well, we can push prices down. And we know that there's going to be some sell orders here. We know there's longs that have liquidity just below this. We're pulling the screen up right here. Screen's up. And so they can push, we have to be careful of this. They could push the market down, trap that liquidity, get a little bit of a sell-off, and then rocket to the moon. So you need to be patient right now. You need to have an understanding of what your strategy is. So with Ethereum, what I'm seeing right now is we're going to have a little bit, probably 2 or 3 days. It's not like the Shanghai upgrade is. I think it's happening around 6:27 p.m. tonight, which is such a bizarre time, but I think that is what time the upgrade is this evening, Eastern Standard Time. There's going to be some movement here. And so I would say we need to let this cool. We can see right here, look at this. We've got the bull. My mouse is just being a little funky. There we go. We have the bullish divergence right here on the hidden volume. We had the relative extrema sticking out to the downside, which signals a likely upward movement. We had this red, which is overheated, flipped gray, which is neutral. So, and then we see this move right at support. So with Ethereum, what I would like to see is, and we're going to talk about that 42K price target on Bitcoin here in a second. Come on. There we go. With Ethereum, what I'd like to see is I'd like to see a little, be careful on a little bit of shakeouts both directions. But what I'd like to see is for Ethereum to move in a more healthy manner. Let's sort of zoom out a little bit. We've got this level right here. This is a whole region, but more specifically, we have this level right here. Option J gives you that horizontal ray, which is likely can come up, reject off of, trap people to the downside, and then move to the upside. And this is right about $2,018. So if we get up to the $2,018 and we're moving with authority and there's buying pressure and liquidity coming in, then this would be a healthy move. If it's just a sudden moonshot, that is a short squeeze if people get up to this level, and we need to be very careful on that. So we want to pay attention to this. Now, in terms of the move from here with Ethereum, option F gives us our fib up to the top. I'd like on a fake out to stay above this 382. Furthest down I'd like to go is basically this 1674. But if this were the case, I think there's something larger going on. I don't think this is, I wouldn't call this a shakeout. If price comes down for a shakeout, I would be looking at 1837 down to kind of this sort of median line here, this sort of zone right here, down to 17, basically 1800. This is what I would consider a shakeout if it were to come down into these regions and then up. If we get pushed up here, I would expect some sort of rejection at this level, some sort of rejection come down, and then a continuation. Hopefully, we might have a little bit of a stop here. This would be very minimal, so I'm going to make this very kind of less visible. So that's what I'm seeing here on this move. Now, what we can also do, of course, let's go to the 8 hour. What we can also do, of course, is come here. I need to move this, get our fib, option F from there, come all the way down to the bottom. We could see where we're at right now is right at kind of at this 382 level. And then the next level up, the golden pocket, is all the way up here in the $2,500 level. So I'm not going to say we're going to go directly up there. I'm looking for likely a little bit of consolidation here. There's going to be people having to slowly learn about the release of unstaked ETH and actual what's going to happen here. I think without having a sell-off, a lot of bullishness is going to come in, meaning the speculative sell-off, not the sell-off of unstaked ETH. When people start realizing that, I think there's going to be bullishness that's coming in here. Now, if we come out to the daily, we could see, I'm going to go to this one here, and we could see here that on the daily, we do have bearish divergence on the volume, and this has already played out, this last flag here. So we're near the apex. So, I mean, because of the apex, I very well could see, meaning that we're near the end of this pattern here. Because we are so near it, and we do have a bit of an overheated signal and a bearish divergence here on the hidden volume, I can very well see, and these rising wedges have a tendency to break about 68-70% of the time to break to the downside. So I think that the fake out could actually just be in line with the chart formation, probable move, moving down here and then coming to the upside. So if we don't get that, that's okay too, because there could be a bullish narrative that comes in because there's not a sell-off on the update, and the update goes well. If the update goes well and you know, all signs are good, then, you know, a push up to this 2020 level, maybe a cool off, retest this 1960, 1970 region, and then continuation to the upside. Now, let's go ahead and jump to the chat because we're going to be breaking down a bunch of TA here. This is all of you all now. We're going to break down a bunch of TA. I voted Huevos Rancheros. Am I right, boys? Huevos Rancheros. Let's get Huevos in the chat because it takes Huevos to keep me fueled in the morning. I have some eggs and bacon and some, I do breakfast tacos. But let's see what this poll says. Okay. Have you hit the like button? Have you shared the BitLab tweet? What was that in reference to? That is coming over here. Where's my mouse? Coming over to the BitLab Academy daily. Coming over here to the, come follow me. This is my page. Come follow me. I put out a lot of great stuff here. But did I not retweet the tweet? Did I not retweet BitLab? I got to do it. All right, we're going to do it together, everybody. Come over to the BitLab. I can't even type it at BitLab Academy BitLab. We're coming here. We're hitting that like. We're following. Boom. And we're coming down here and we are retweeting this tweet. I can't believe I didn't retweet this. This is today's tweet. You get entered to win a bunch of stuff. We're spinning the wheel on Friday to draw from people that retweet for what you get. Now, coming to the charts, what did you guys say? Did I get any notes? Mods, let me know what people were saying. Until I get that, I'm going to go through some of the basics first. We got Ethereum. Let's look at Bitcoin. We got to look at Bitcoin. Where are we at today? What's going on? Okay, we got this bull flag here. Okay, bull pennant. If we were to extrapolate this flagpole, it would be $42,000 target. Do I think that's going to happen? No, not necessarily. I think it's more likely if we do even work our way up there, it's going to take some work up there. It's going to stair step. It's going to boom, 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 like this. If that were to happen, this is a very strong if. This would take a lot of liquidity for Bitcoin to get up to these levels. So if we look at this on a smaller time frame, let's see where we're at with what's going on. Let's get some charts here. Okay, we're getting a bit of a bull flag here as well, but this is starting to look a little bit lopsided. You know what? Exit that. We're going to come down to the 30-minute chart, get more clarity. Okay, we got a little bit of a trading channel here. Option T. For those of you that have not watched yet, make sure you come over to youtube.com and come to BitLab Academy, which is right here. And follow us, youtube.com/@BitLab Academy. I say this because a lot of people also watch on the 24/7 stream, but come over here to playlist. Come over here to view full playlist and come and watch the Pro Trading View guide. It's a 12-minute video. I go through very quickly a lot of very easy ways, quick keys, quick tips, so you can move through these charts quickly rather than having to always use toolbars. How do you set up templates so you can go through different charts very quickly and different groupings of charts and different indicator setups? You know, I can go through different indicator setups. You know, on a click of a button, you have all your quick keys, all the stuff. I want you to be able to navigate easily. Now, so the reason I say that is because now we're going to start doing that. Option T, this gives us a trend line. Option T, we're going to try and see, okay, this is going to be the most important here, this one right here, because this is, we have a bit of a bull flag here. I'm going to delete this projection. So what I want to see here, now the interesting thing is if we look here, we're getting bullishness is dominating the volume here. Why do I say that? Because when we're looking at the hidden volume, if we go just to the chart, the hidden volume, this is all part of the BitLab trading stack. This is an aggregate of on-balance volume, as well as some other underlying metrics that are combined into this, as well as being able to read the divergences of volume and interest with what price action is actually doing. So if this is coming down and then we're seeing bullish divergences on volume and we're not seeing a lot of bearish divergences up here, then the bullishness is sort of dominating the volume narrative in this region. So then we can look to the support that we have. We've tapped this, touch this back at the top, and we're just tap, 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 tap on the bottom. So this is getting a little worrisome, but we are getting, we were a little overheated. I would say if we break this level, we're definitely, we're very likely, and maybe it's needed, going to come down and touch the 28,600 level. Okay. And that would, you know, this is not bearish. We need to understand when we break out, we don't need to trade this breakout. And if you're a super advanced trader, do it. If you're not a super advanced trader, okay, let this break out, let this come back, potentially retest, or at least roll over, and you see the signs and symbols and the things that I've taught you here within, whether it's fib levels, whether it's divergences and volume, a basket of goods that shows you that we're starting to roll over. And then once we break this high, then you could take that trade if that's the strategy you want to do. But this, as it stands right now, this was trying to push up. Now we're riding the lower line of this. You know, I'm thinking, man, it's hard to say. Let's go on the 2 hour. Okay, you can see right here, look at all of these relative extrema. This is bullish, very far to the downside here. This is essentially, think of this like a slingshot. Think of this like a slingshot when the bars are down, not just down like, you know, when they're outside of this momentum wave. When they're down, this is a slingshot, and we have the bullish div on the volume, and we got a little bit of a move, but it got all the way up and got rejected. So we need to keep an eye on this, because this is looking very unintelligible. If this does move up, what I would do is I would look for this option T. I would do a measurement from here to here, project this out there, and if we were to break to the upside, on this smaller time frame, we're looking at the 2 hour, then I think we're going to come up and test the $32,000 area, which would be very healthy. It would be a very healthy move if we did that. We're getting some bullish narrative here to do that, but we are also seeing indecision. So what does this mean? If we do get rejected here, then it's not the end of the world. We have this huge volume node right here. We see this VPVR. So if we pull back down here, we have all this previous resistance. We could flip this to support. In all honesty, if this were to happen and we get a strong bounce here, that would be very bullish, because what we don't want is for price action to just go like this. Because if we get that, I mean, without any, you know, corrections along the way, then what we get after that is this right there. So we want it to stair step up. So let have these push up, consolidation, very healthy, push up, consolidation. We want to continue seeing that. And when we do get a pullback, we have our levels already mapped out here on the chart. We know it's up. We got the volume nodes. We can see this previous level here. If this does lose this level, then our next level below that is basically $27,000. And then I'd like to stay above this master, this very important level that really signals the clarity that this breakout was a true breakout. So I'd love to hold above the $24,500 level. That's what I'd really like. Below that, I'd be keeping my eye on that $22,000 level, 23 from the short-term hold to realized price. Now, let's go ahead and we got to breeze through some other charts. We did Ethereum. Let's look at Cardano. Cardano's been making some interesting moves. I want to do this on a different Cardano chart. Where's my Coinbase? There we go. Okay, now come out. So let's go ahead and delete one of these. Okay, now let's go ahead and look at this. So Cardano broke out of this downtrend. This is the 8 hour, and we're seeing, okay, if you look at this, we could see a little bit of a rounding here. What happens when we got a rounding? What happens when we had a rounding? We had a strong sell-off. So what I'm kind of apprehensive to look at right here is, let's go ahead and drag this. Go ahead and drag this fib all the way across. Go ahead and do this. Kind of like there at the top of this move. So we're getting a lot of interactivity here. Now, the problem with Cardano is everybody's so impatient. Cardano is a sleeper, and then it runs, and it has been performing actually quite well. This is forming a bit of a channel. It's a bit of a channel, a bit of a, we'll do more. It's more of a channel than a rising wedge, but it is, either way, it's following this trend. Everything is really waiting right here on the total market cap for altcoins is really waiting on what's going on with Ethereum. So Cardano as well. And when we start getting the liquidity pouring out, and we've talked about this a number of times, and this is I'm not going to scroll back through it. the TED Talks macro thing with where you see Bitcoin and then Ethereum and then large caps and then micro caps or smaller caps. Ethereum is really holding up the market right now in conjunction with Bitcoin sitting at a key level. So in all honesty, if we look at Cardano, go to auto, I mean, we're sitting very pretty. We still have a lot of room to the upside. I mean, what is going on? There we go. So we're sitting right here. Ooh, look at this. I did not see this. This is why you zoom out. Looks like we got an inverse head and shoulders on Cardano. We got an inverse head and shoulders on Cardano as well. Option T. Look at this. Left shoulder, head, right shoulder. This is beautiful. This is why you zoom out. You got to zoom out. You got to zoom out to zoom in. Now this level, look at where this target is. The measurement of an inverse head and shoulders is when you have a left shoulder, a deeper head, and then a right shoulder, about the same levels. And then you take a measurement from the neckline, which is this line right here, and you just, if you want me to see me actually do it, you come over here, click this. If you're not using quick keys, go from the neckline, go to the deepest part of the head, and come over here to where it would break out. And you can see that this line, you can see my cursor comes all the way over here. Look at where this level is, perfectly in line in confluence with not only a volume node here where the volume goes up, also previous price action, support and resistance. Boom. Option J gives us, oh, you know what? It showed up. It's just very dim. So we can see, look at this. This is a very clear target. If Cardano is able to break this level at about 41 cents, we're going to have a little bit of course, contention on the way up, but we're going to likely get a little bit of a rejection, which will be healthy as it can be. If we push up, everybody's bullish, bulls get trapped, it comes back, retests this neckline, and then comes up with the small movements along the way. So that's what I'm seeing on Cardano. Cardano is looking poised as it can be. We just need patience. We just need patience. And on the flip side of that, if this were to break down, we can even just do this most recent move, option F, top to bottom. Then, if this does try to come down and test again, I could see, I would not want to see it come back down to 34 cents. Again, if this were to come down, I wouldn't. If Ethereum and the altcoin markets are testing to the lower side, then I can see that, oh, look at that. We're at 311 likes. We only need 12 more likes, and we're doing a lifetime giveaway of the indicators right before the updates for the indicators come out. And maybe we'll do some other giveaways as well. We got to get it above 325. Hit that like, hit that subscribe. So I'm looking at this more bullishly. I think on any pullback here, I would buy the 382 level with a bit of a stop if I was a shorter time frame trading. But for me, I'm position trading, getting prepared for the continuation of the bullish trend here. My mouse ran into my monitor. So on any of these pullbacks, I'm not actively swing trading these. I'm position trading, preparing for these large moves. And once it gets up to this level, pulls back, I'm buying that dip. Once it pushes up, pulls back, I'm buying that dip. That's my strategy because I am position trading. Your strategy will have to be determinate based on whether or not you're trying to actively trade throughout the day and take advantage of all the price volatility. Now, okay, we got to do a bunch more coins here. So yeah, I'm looking at breakout soon. It's not going to be immediately, but when we do break out, push up to about the 44 to 45 cent range, pullback test of the 40 cent range, and then a continuation up to the 77. Man, 77 cents. That will feel good for Cardano. Now, coming back, we got, let's see, some other ones. We got HBAR. Somebody was asking for HBAR. I see let's do XRP first because I already have the chart up. Let's go auto. Let's go 3 days. Let's look at that larger time frame first. So, okay. We've got this key level, rejection, support, rejection. We're in this key level now. Let's go ahead and delete our fib. Let's delete this target and let's look right here. Okay, let's come down to the 12-hour Cardano, or not Cardano, XRP is doing, look at that, flag, a little bit of sideways. This is the day. This is April 12th. This is when Ethereum is having their upgrade. This is the CPI data. This is when the FOMC minutes are. There's so much data coming out today. If this were to break down, first off, we have the 382. Look at that. 382 is held perfectly, held very nicely. If we lose this level, we do have some price interaction here. Let's turn on the VPVR. Not the 4MA. Where's my VPVR? We do have a bit, let's see, of the volume. Yeah, we got a lot of volume, so volume's not going to be a huge help there in terms of the VPVR. But if we do lose this level, then I can see it coming back down to the 43-cent level. This is if things, if there's a very, very hawkish tone and they say that they're going to continue raising rates and we may have a 50% or a 50 basis point hike in the future, then we very well could see markets tank a little bit, sell off before bouncing. Now, do we get any, somebody spotlight if there's any good questions that have been asked, spotlight them, let me know. And also, I haven't seen if there's been any super chats. Let me know. Okay, we got 338. All right, so if we get to 350, if we get to 350 likes, I'll do 2 giveaways. I'll do lifetime access to the BitLab Academy courses and lifetime access to the indicators. 2 different people. Let's get those likes up. Now, I keep saying Cardano. XRP, we're sitting right in this contested region. This is like the $25,000 region for Bitcoin that was fighting through. So once we break through this level, let me double click on the chart, minimize the other indicators. Let's come to the 4-hour. We can see right here, this shape has now changed. We have 6 bullish divergences on this right now. You see this? This is the BitLab market intelligence. This is why I love it. You don't have to have all those indicators up to see the divergence. We got histogram, RSI, momentum, on-balance volume, and an external indicator as well. This is on the 4-hour, as well as look at all these sticking out to the downside. So it looks like they're trying to trap traders going short for a potential move, maybe a setup for an upside price action move. Now you need to be aware of that. Just because we break this trend, you don't just need to sell only to have the market reverse on you. This is what I'm talking about. We can use tools at our disposal to really see when we have the odds stacked in our favor, or if the market is trying to manipulate us. Price action is moving down, but all these different 5 momentum. Now this is okay. So we're getting a little bit of we had a lot of bullish divergences, and they're coming on and going off, which is signaling that there may be some bearishness coming in. But I'm looking for shakeout potential today. Today is shakeout potential today. Tomorrow is reset and reattack the markets. So this is a ascending triangle, not a wedge, because we have a flat top here. This is ascending level of support. If we lose this, we do have price interactivity above us. I'd be looking, potentially at a buy down at 43 cents, 43, 44 cents to add to the position. But in terms of price action from here, turn off the market intelligence. We can even see just even on the smallest move that we had right here, option F, go from the top to the bottom of just a small move. If we don't get the washout, and we can see that the 1 point, I mean, we have, just getting back up to the 1 is 58 cents, just getting back to this high here. We do have to pay attention though, that we do have, this is very small. I can barely see it. So I know you all can barely see it. So we have the golden pocket right here, right about 54, 55 cents. So if we are able to sustain this, maybe a little washout here, but sustain this and break above this level here, this resistance, then I'm looking at the next level being 55 cents. Very weak support resistance here at this 786. Just because of the price action as well as the volume. So I'd be looking at 55 cents, next stop up to 58, and then potentially heading up to the 1.618, 64 cents. Things are setting up. Things just need to be patient. Because the market is so bullish right now, I just want to take a moment, everybody pay attention to this. Because the market is so bullish right now, you can't just count on every bullish play playing out. When it's really obvious and everybody is planning on that, The market makers will push things to the breaking point to trap you as retail, to trap you in your emotions so that you can donate to them buying new wheels for their new Mercedes, so that you can donate to helping them buy a new boat. So don't get trapped by trading emotionally. Trade on data, have a plan in place. And as it stands right now, things are a little wishy-washy. If you're not in position in terms of smaller time frame, if you are not in position, for instance, on XRP here, you know, when we found support, we're coming up, testing resistance. We kind of broke through it. We came back down and tested the zone. Breaking, I mean, the conservative level here would have been breaking, buying. The conservative strategy would be buying once you broke past this previous high. Not only did you break out of these downtrends, but you also broke past a previous high. So this would have been your entry. So right here, you're not so worried about, can I get in? Because you are utilizing things in advance. You're letting the setups come into play and then taking advantage of them. Now we've done Cardano, XRP. We can do a full fib here. If this does break down again, I would be adding to my position. I'm not saying that you should be, but I'm doing longer term position trades. But if this does break down from here, I'm not thinking this very well could be a bot, but I'm thinking of a shakeout more in the region of like maybe 47 cents and then continue up. If this breaks down from here, I'm actually looking at buying lower targets, maybe this point of control on the VPVR, which is this red line coming out about 39 cents. If we are, you know, basically rolling over and coming down. Now coming over, let's look at HBAR. Somebody, I saw that in the list that was right next to XRP. Let's zoom in here. Let's go to the 12-hour auto. Let's see what's going on here. Okay, we're getting descending channel, broke out, falling wedge, which is a bullish pattern, broke out to the upside. We have another basically falling wedge here that is kind of an undetermined, ugly falling wedge. This is just what you see here. What this looks like, what this is displaying is market indecision. There's bullishness and bearishness because the market, Bitcoin was the initiator really for the health of the bullishness within the crypto ecosystem. And it broke past 25. Now, as risk starts to matriculate out of Bitcoin and people start taking some profit, and also not even taking profit out of Bitcoin, but new liquidity starts finding security, you know, they're feeling safe about the risk in the Bitcoin environment, in the crypto environment. So then they start deploying capital into these other riskier assets. Why riskier? Because they have smaller market cap. So we see HBAR is a huge play that I wanted so bad, so much earlier. And I was able to really finally, I took the plunge. I saw this falling down here. I looked at this. I saw, man, this looks like a double bottom. And my entries were roughly about right here. So on this pullback, I added some. Somewhere in this region here because of this double bottom when I was a little too bullish. But either way, I'm in position. So, but we're seeing this bullish pattern only breaks out a little bit. Bullish pattern, but with less momentum. We're waiting on the gates to be opened with what happens with Ethereum and with the liquidity flowing in and all this data about the FOMC and the minutes and all this stuff. We're looking here at the Fibonacci. Well, let's do it from the actual bodies. We're coming up into this region of the golden pocket. So if we can break above this and break this level at 7.6 cents and clear basically 8 cents, which is a golden pocket, then I think there's actually going to be a display of stronger bullish momentum if we're able to come up here and break through this, get up to previous all-time high, previous range high of 9.3 cents. From there, I think we're going to have a lot of explosive bullishness coming into coins like HBAR. And, you know, we can also see coming over here, looking at Algorand, we see we can come to 3-day. We got to do this really quick because we got to do a giveaway. So Algorand is looking, look at this. It's got this previous level right above us, 29 cents. This is a level I'm watching breaking through 29 cents. We are currently having this arm, it's being on hold. We do have a blue wave. This is on the 3-day. Let's come down to the 4-hour. Okay, it looks like we've got a bit, okay, relative extreme is coming out. This is pushing up. We need to break this high, this 22-cent high. As it stands right now, option F coming down. If price can't not even get to the golden pocket, we may see price action testing a little bit lower. Okay, so now I got to come back to my screen. I've got to connect the spinny wheel thing because I'm going to do 2 giveaways, lifetime to the courses and lifetime to the indicators. Go over, make sure right now as I'm connecting this, come over to the BitLab Academy Twitter page, retweet this tweet. This is the one I'm going to draw from this tweet right here. And I'm also going to draw from, I'm going to draw from this one and Saturday's tweet. Those that know what I'm talking about, I want to incentivize you. So the indicators is going to be from today's tweet. The course is going to be from the Saturday's tweet. Now, let me pull up. Where is that window? Here we go. Okay, comment picker. Sorry, I wasn't planning on doing giveaways today, but I just wanted to make sure that you guys could get some stuff. All right, now I need to connect, log in with, oh, you know what? This is gonna be the wrong account. Cancel. Give me 1 second. Everybody, let's get that drum roll. How you know, who do you think is gonna win this? Let's go ahead and switch this over, BitLab Academy. Okay, now we need to go back. Okay, now we're going to do this quite quickly, so stick with me here. Let's see who won. Connect, log in with Twitter. Okay, authorize app. We are authorized. Now coming back to the thing. Now we're going to do, this is for the indicators. The indicators is going to be, let's see, copy link to tweet. This is from today's. And remember, get involved with the Discord. Alex Green, Alexandra, drop that link to Discord. We have free section in there. I'm going to be way active in there after this next week once we finally get the stuff launched. So we're going to gather, get data. Now, who won the lifetime access to the indicators? Let's see. If you've already won, we are going to move on to another person. Desert Crypto. Always see you in the house. Reach out to me through Twitter and on Discord, and Alex Green may be reaching out to you as well. Now we got to come over to Saturdays, which was the banks one, this one right here. Now we got to do copy. This is going to be lifetime for courses. Now we're going to reload this page. Okay, now boom, get Twitter data. Now this is lifetime for the courses. Let's see who wins. If you won before, you can't win again. Lisa MT. Awesome. You get lifetime access to the courses. Thank you, everybody, for being a part of this. Thank you for being a part of the community. I love you all. I appreciate you all. Hit that like button, hit that subscribe button, ding that bell on the way out. I think this is our highest amount of likes live during the stream. Share this with your friends. Get people involved so they can educate, and check out bitlabacademy.com if you have not yet. If you have not yet, go down there to all these socials and to the website. Get involved. The prices for the courses is going up with the updates. So if you get involved, become a member before the updates, before the price goes up, you get to keep that lower price for the life of your account. So with that being said, I hope you all have a wonderful day. That's all I got. I'll see you over and out. Adios, muchachos. Thank you for coming. Thank you for tuning in. Hit that like button, sucker.